I want to bring in our first guest here, Teddy Parrish of Parrish Capital. And Teddy, let's first get your take on what we're seeing, what we've been talking about now, the market response to the Fed's announcement today. I guess from your perspective, do you think the market still believes that the Fed is in whatever it takes mode?
Yeah, yes, it is. I think the Fed's really focused on the depth of the recession, and that's its primary focus. And while we've seen a few green shoots of activity, it's still critical that the Fed keeps its foot on the gas and maintains its by any means necessary actions. They are doing so by keeping rates near zero through 2022, and also expanding the balance sheet by buying corporates and mortgage bonds. And so that's critical. And I also think it's critical that we have more fiscal policy, and hopefully it's forthcoming. And we expect further provisions for corporations and consumers to aid in the recovery to get us back to a self-sustained expansion. It's necessary. I don't think we've seen the worst of the contraction in terms of the damage that can come for corporations and consumers alike.
Well, Teddy, taking a look at the levels that we're at today, the NASDAQ above 10,000. At the same time, we had the Fed throwing a little bit of cold water on what we've been seeing, also cautioning the fact that the virus still poses considerable risk. So do you think the market at all is getting a little ahead of itself at this point?
Yeah, I mean, so we welcome the performance and the rebound, of course, but we are long-term bullish on the U.S. and global economy and the stock markets. And we have participated in the comeback. But this robust recovery in the stock market is pretty much priced in recovery for the economy in, say, 2021. I mean, if you look at earnings projections, they're unreliable for the next couple of quarters. So it's a big wall of worry that we have to climb. 6 months is a long time before we're at full recovery. I mean, we're like puppies. It's going to be like dog years. That's a long way to go before we're clear of this virus.
Hey, Teddy, if you're an investor, who's looking around saying to yourself, wow, I really missed out. Are there any sectors that are lagging sectors that will catch up with where the broader market is, or at least let's say where some of the tech names are?
Yes. So as I look at the market, there are, of course, pockets of frothiness and growth and momentum stocks, like you talked about earlier, Amazon and Tesla and some of the other momentum players. But as a whole, we think that the indices themselves are fully priced, but there are pockets of compelling opportunities in early cyclicals and value stocks. For instance, you talked about financials. I happen to think that there are great opportunities there. Most of those companies have maintained their dividends. I know interest rates are low, so net interest margins may shrink, but their balance sheets are pretty solid, especially the ones that we own. I think consumer staples, they've been a very big beneficiary of the increased demand due to the virus, and they have some pretty good pricing power, which we don't hear that a lot. And we expect that trend to continue. So we have some stocks and consumer staples that we still like, Han Celestial, even Kraft Heinz, which has been a dog the past few years. I think it's actually perked up a bit. And we also like Walgreens. And the energy sector, although it was a nightmare earlier this year, I think it's turned the corner with prices coming back up, and there's some compelling values there. We own the big major integrateds there in BP, Occidental Petroleum, Royal Dutch, and even Schlumberger.
Teddy, we had a guest on yesterday who talked about the moral hazard, as she saw it, that the Fed has put itself in now that it's dipped its hands into ETFs. And the thinking there was that the market would continue to rely on the Fed to jump in when we hit the lows, and that the Fed would need to send a stronger message to say this is a one-time thing. We certainly haven't seen the kind of distortion we've seen with other central banks like the Bank of Japan, but I'm curious how you view that risk and how the market is viewing the Fed's hand in that right now.
Well, I think the Fed's actions and central banks around the world, their actions has been one of the main ingredients in the recovery. There's a lot of liquidity out there, and I think everyone's taking the right tone. This is a pandemic, a crisis that's unlike any other. So, I mean, you got to throw all of the tools at it, and we'll have to pay the piper at some point. But at this time, I mean, it's by any means necessary to get the global economy back to where it needs to be.
Teddy, I got to tell you, you've got a lot of nerve.
Mm-hmm.
You are a brave man.
Yes.
To be suggesting you should be underweighting tech. Okay, now I'm a tech bull. I see here you say you're underweighting tech. Come on, seriously? The trade of our lifetime, and you are not so sure about that, right?
Well, I'm underweight tech now. I wasn't a few months ago. So we took the time to actually rebalance portfolios. I actually manage money for individuals who are retired. So we have this thing we call a liquidity window philosophy, where we set aside 3 to 5 years worth of cash for spending needs so that money is not at risk and they don't have to sell in adverse environments. So that's one of the areas I took a little from because they were right at all-time highs. And, so I pinched a little from there. So we're slightly underweight. But if you add in the consumer, communication services sector back to tech, then we're slightly underweight because I consider Google and Baidu tech stocks, but they're actually in the communication services sector.
Got it. Thank you.
All right, Teddy Parrish of Parrish Capital. Always great to get your perspective. Thanks so much for taking the time today.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.